The index is staged a follow-through day on day 7 of the current rally attempt. Keep watching and we'll go over all the action in the indexes and what stocks you need to be watching if this rally is for real. Okay, so the market finally staged a follow-through day, giving an all clear to buy stocks. While the overnight action on Thursday indicated we would open lower, an article from the Wall Street Journal came out right before the open saying that after the Fed raised rates 0.75 basis points in November, they would consider slowing the pace of the hikes and assess the economy. That instantly sent the futures higher, the dollar down, and yields down as well. So let's go ahead and look at our current rally attempt that we have. You can see last Thursday we gapped down and then we pushed higher, closing strong, giving this our first day of the rally attempt, our day 1. From there, we've grinded sideways, slightly higher, met some resistance at the 21 EMA here, which is this green line, but we never undercut the low from Thursday. Now today, we tested this June low again, which is the bright green line, which seems to have now maybe flipped to support. We've tested it 3 times, every time closing higher from it. Okay, so today we pushed higher, we closed up almost 2.25%, and our volume was higher than the previous day. If I switch over to the SPX, you can see the volume there coming in higher. So a follow-through day can occur on any index as long as all the criteria is met. I primarily look at the NASDAQ, however, we have the same situation on the S&P. You have your day 1 here, and our follow-through day here, up again about 2.25% on an increase in volume from the previous day. So that is a valid follow-through day, and we're back above our 21 EMA here, which again has been resistance for both indexes pretty much this whole bear market. So the question is now, are we going to stay above that? Are we going to get a sustainable rally? Anything's possible, but we do need to be open to the scenario that we just roll over and crash again and make new lows. Although today was a follow-through day, we did have expanding net new lows for the 3rd day in a row. You can see this in the bottom pane with the bars expanding lower and a red background indicating a streak of 3 or more days. Next week is going to be pivotal. We have earnings from the mega caps like Amazon, Apple, Google, and Microsoft. And we also on Friday get the PCE price index report, which is the Fed's preferred method of gauging inflation. Now that we got our follow-through day, we do need to be open to the idea that the market could move higher. We need to be aware of which stocks are setting up nicely, which stocks have been showing relative strength, and which ones could be the leaders if we do push higher. Let's go ahead now and take a look at some of these individual names. Okay, first up is AEHR. This one had a nice rally and now we've based, formed a nice cup, and we pushed out higher this week. We have the relative strength line at new highs indicated by this green dot here. If we go ahead and look at this on the daily chart, you can see that same cup pattern. We gapped up and pushed higher all the way through this pivot. We do have this unfilled gap here, and because this broke above the previous high of this base, this is one I'll be watching for a failed breakout pullback to the 21. I did a study on that. I'll put a link to that in the description. It's a very low risk way to get into a potentially winning stock that has a positive risk to reward ratio as well as a positive win rate. So again, I'll link that in the description. So if this one comes back down, pegs this 21 EMA and potentially fills this gap, that is one I would be looking to initiate a position on. Okay, next up is Chipotle, CMG. This one's forming a very nice cup base here. We've got some tight closes along the bottom of the base, and we have nice volume coming back into the upside. If we go ahead and look at the daily chart, here's that same base. We do have earnings coming up next week, I believe on Tuesday. So this is one I'll be watching for a buyable earnings gap or to reclaim this 50-day and 10-week moving average on volume as we build up the right side of this base. Moving on from there, we're going to look at Double Verify, DV. This one tried to push out of this flat base this week and this nice multi-touch trend line coming down on a weekly chart. Relative strength line is at new highs. It just didn't muster up the volume to get going. You can see on the daily chart, we have that flat base within this rectangle, pushed slightly above it, and then we slammed back down. The volume was light as we came down. Friday, we came down, pegged the 50-day, and you can see the volume increase there as it closed at the highs. So to me, that looks like a buyer stepped in and just started scooping up as many shares as they could get at that price. This is another one to keep watching. It may try to push out from this area again, or it might have volatility, contract, and form a nice low-risk entry before trying to push higher. Okay, next up is DY Dicom Industries. This one's forming a very nice cup base. I like the volume profile here as the volume has just died down and then picked back up as we come up through this 10-week line. Relative strength line also at a new high. This one's acting very well. Daily chart, you can see the same cup here. We gapped up. We had a very nice trend line actually that this gapped right through. So it may come down, fill that gap, it might not. This one's acting very strong. You can see it bounced right off the 8 EMA and the 50-day confluence today. Volume picking up as we come up this right side. So this is another one to have on your radar. It's got great price action and great relative strength. Okay, shift 4 payments. This is another one that just seems to be basing sideways, continuing to make higher low after higher low. We have this multi-touch trend line on the weekly chart, which it still is just finding resistance at. You can see we closed right on that 10-week moving average. Looking at this on the daily chart, this one has a history of pushing above this 200-day moving average, which is this dark blue line, and then coming back down. You can see we pushed above it here, came back down, pushed above it again, came back down, and then this week we pushed above it once again before coming back down. So each time just continuing to make a higher low. One of these times, if it does actually go and push, this one should be on your radar. Again, relative strength, pretty much going flat while the market's been coming down. Definitely something to keep an eye on. Okay, next up, SRPT. Fair warning, this one is a biotech company that does not have any earnings. I can bring up the earnings sales volume dashboard by John Machow, and you can see that all the EPS are negative, so this is losing money. However, it does have nice sales growth, which you can see there. The price action on this one has been very strong. We're 6 weeks into a flat base with very tight closes, just riding this 10-week moving average, which is the red line. Looking at this on the daily chart, you can see that same thing, just riding this 50-day and 10-week line. If I zoom in, we do have a mini coil. So here's Wednesday's bar. We have Thursday and Friday's bar nested within that. We also have the potential for a kicker. So here's your red setup bar. If we were to gap above the open of 112.86 on Monday, that could be viable as a kicker. I have a whole video on those explaining what a kicker is and how to trade it. I'll go ahead and post that video as well so you can watch that. Moving on now to Shockwave Medical. This was one of the first stocks that ran up during that May, July, August period where we actually had a nice tradable rally in the indexes. It's forming a new base here, still working on it, slightly below that 10-week line. However, this one overall has been super strong. You can see on the daily chart we have this nice multi-touch trend line coming down. If this one can get through that trend line and above Tuesday's high of 284.41, that would get it back above the 10-week line, the 50-day. If it can do that on volume, that might be one I'd be looking to initiate. Earnings coming up on November 7th, so you do have a little bit of time there potentially to build a cushion. Last one for today is going to be Yelp, YELP. This one had this nice double bottom base. We pushed above that this week. Volume wasn't overwhelming. However, on the day that we got above the pivot, volume was above average, which is good to see. Our relative strength line continuing to hit new highs. Looking at the daily chart, you can see that same double bottom base. Monday, we pushed above that pivot here, gapped up on Tuesday, and we've been holding strong in that area. Friday, today, we came down, tested this 8 EMA, filled the gap, and then closed right near the highs. So very strong price action there. You could also argue that you have this mini inverse head and shoulders here. So that would be your left shoulder, your head here, your right shoulder, and then your neckline would pretty much coincide with this standard double bottom base pivot coming across there. So we retested the neckline, the double bottom base pivot today along with that 8 EMA before we pushed higher. So definitely one to have on your radar here. Continued relative strength. Hopefully we can form a nice low risk entry up here before we take out these previous highs, maybe a mini coil or something like that. So that's all I got for today. Remember, we did get that follow through day, so we need to have a bullish mindset and be ready to purchase stocks if this rally is going to be for real. Thanks for watching. If you enjoyed this video or found any of the information useful, please go ahead and hit that like and subscribe button below to stay up to date with all my latest videos.